Coming up, we have job gains cooled in December, capping year of weak hiring. Non-farm payrolls rose by 50,000, but still missed expectations, while unemployment rate fell to 4.4 versus the previous 4.6. Wage growth bumped up to 3.8% versus 3.65. The U.S. Supreme Court did not rule in the Trump tariffs case today. And out of Japan, Takaichi, I believe, considers dissolving lower house, calling a snap election. Starting off with the big one, NFP came out today. Now, it did miss expectations and the previous was revised lower, but on the flip side here, unemployment actually trended lower. So previously it was at 4.6 and now it's at 4.4. That's a positive decrease. The previous major labor data was actually flipped. It was actually NFP slightly beat and then we got an uptick in unemployment rate. So this right here is basically the same scenario but backwards, and so the market interpreted it in a good way in my opinion. Wage growth as well also increased as well, so it seems like the labor market's frozen. People have jobs, they're not getting new jobs, but they are earning more, and that's boosting the US economy overall. So going over what happened today, when it comes to these news events, a lot of it is expectations and sentiment. So leading up into the release, we actually saw DXY get somewhat of a bid there, and we were trading within these moving averages. Now, the actual outlook and my interpretation, and from what I've read from people way smarter than me, is that this is more of a mixed bag story, not too hot, not too cold situation. So the job market is not so bad that the Fed has to cut rates at this moment, and they can actually wait a little bit to go ahead and keep rates a little bit elevated to go ahead and address the elevated inflation. Now, if you see, we're still above the 2% target. However, we have started to trend down lower on the previous CPI release. So perhaps inflation is taking care of itself and the Fed can just hold a little bit as we get more data. If it continues to trend in that direction, then the Fed can proceed with more confidence that they can start cutting rates. So we've closed firmly above the 250-day moving averages here on the daily time frame, or we're about to. We have 1 hour and 34 minutes left in the day for the DXY. So perhaps we get some kind of pullback in this dollar bearish trend. Now, I personally don't think that the picture has shifted so much. Remember, this mixed bag didn't really change the narrative one way or the other. It wasn't in favor of the Hawks or in favor of the Dubs. So in my opinion, trading is staying the same. Fed's gonna cut rates when they can. No hawkish rhetoric or anything like that. So if DXY does catch a bid, which I think it will, very minimal, I'm looking to go ahead and short that at some premium levels. What would that look like? Well, if I go ahead and put a Fibonacci just from here low to high, this 99 area looks pretty good to me. And the more obvious one is that 100 handle, 105 handle there. So if we do get a little bit of a retracement into that area, I think that would be a perfect short opportunity. If we just look at the past here, this level held as resistance once, 2, 3, 4 times, and if we get that fifth touch there, I'll be very confident shorting there. Another level of resistance, again, we just put that Fibonacci from low to high, that 99.400 level or 99.500 level, that's the 61.8% retracement on this lower downtrend here, and that could also be a very good opportunity to short. We just got to see what happens once we approach that level. As far as possible trade setups, I talked about this on the stream here. I would love to catch Aussie dollar here to the long side at this 66,200 level. I have an alert here set, and that'll also meet with the 50-day moving average. Now, there's a chance that 61.8% retracement level on the DXY does hold, and so that will kind of look like this on the Aussie dollar chart. So I'm also open to this I don't like that number, but 600 level. That will be a good opportunity as well. We just have to see what happens once we approach that level. The thing with the Aussie is they're looking to hike the rates, Fed's looking to ease the rates. It's the perfect storm. Aussie's a very risk on asset, so if we continue to see those risk on flows into the equities and metals as well, metals does influence the Aussie dollar and New Zealand dollar as well. That'll actually be really good for my picture. If you just look at the interest rate projections chart here on the Edge Finder, if we just toggle just Aussie and US dollar, you can see that going into Q2 of 2026, the relationship between the two is going to change. I know I've talked about this before on the channel, but right now the US dollar is the higher yielding currency in red, and as you go into Q2 2026, it's going to be the lower red bar. It's going to be the lower yielding currency, and Aussie dollar is going to take over. So that transition is reflected here on this chart here on the bottom. That's something I really like to see. So as long as that narrative is still intact, still alive, I'll be more than happy to enter that trade. That's going to be a really good trade in my opinion. Looking at the top setups here as well, I'm going to go to major currencies only. One thing I did notice is now the New Zealand dollar, Aussie dollar is now starting to bump up as far as bullish reading, which is really good. And you see US dollar CAD here getting into that negative territory. Not quite yet. Remember, this was more neutral, so it is kind of bumping down its score. Dollar CAD would be a fantastic setup This is also one that I mentioned on the stream here. If I just go to the weekly time frame, this was a level of resistance for some time here. So if you just look at this, this is what I'm referring to. So this is the dollar CAD right there. But if we go down now to the current levels here, this is a fantastic level of resistance that I would like to short. Perhaps even a more premium level. My eye just caught this here, but perhaps something like this would be a good level as well. So going to the current one here, I'm not going to try to confuse, I don't want to confuse you guys, but if we go to fib low to high on this recent little downtrend here, this lines up perfectly with the 61.8% retracement level. But if we consider this overall broader downtrend, then a Fibonacci retracement level from that low to high here, this would be, this would be the 50 and this would be the 61.8. So if DXY does catch a broader bid higher, like all the way up to that 105 handle, then perhaps this could be what it looks like on the dollar CAD chart. So I'm going to be very mindful. I'm going to see what's happening. I'm going to use discretion as we get into these levels, see what the outlook is looking like, see what the themes are. If anything changes, perhaps Fed just gets aggressively more dovish or something like that, then of course I would just take a stab at it at this level, but I want to be patient, right? So if this level breaks, then most likely we are going to revisit this level and I can just get filled at a better price, a more premium price, and I don't have to be in drawdown, right? Why be in drawdown if you can avoid it by being patient? One thing I always say is just be on the right side of the V, which basically means wait for the move to reverse, right? If you're trading it to the upside, wait for you to see a clear shift in structure. Don't just start shooting stars or rallies. Same thing with bearish moves here. Don't just start buying a falling knife. Just wait for the correction, wait for the right side of the V, which you can see right here on this chart. So that's what I'm going to do with the dollar CAD. I'm just going to be patient here, but yeah, this is a fantastic short opportunity in my opinion. Dollar Swiss is starting to work out for me as well. This was my income trade. I put it in December just because it was a quiet month. It's now starting to rally here. This was my fill level. I was going to add another position here, but I didn't like how we were stalling out, and now we're starting to go ahead and see some momentum. So I have some chart alarms here at that 200-day moving average that you see in yellow. That's going to be a level that I'm going to watch as far as take profiting goes. But ultimately, if the US dollar does catch that broader bid, then that 8100 level, this top level of resistance here, I'm going to highlight this in red. That'll be a very good level. It's held as resistance for some time now, all the way since July 2025. So if we get there, awesome. I just get a little bit more, but nothing too crazy. Pound dollar, I'm going to start looking to take profit here. I missed the opportunity as I was away from my desk. I didn't see how far it dropped here, and markets are now closed. So I'll do this in the morning here. But if we put that fib from low to high, this 50-day moving average, or this is right up on the 200-day moving average, also the 38.2% retracement level. So I have the alert in this area. So perhaps I can just wait a little bit, see what happens. But if we actually break this 200-day moving average, then we can actually, probably find our way up at the 50-day moving average, and I can get some more profit. So what I'll probably do, since I missed the opportunity, I'm just going to monitor it in the morning. When Sunday opens around, I'm just going to throw the stops and just let it take me out. If I make less, that's fine, whatever. But yeah, good trade. Euro dollar, we're seeing some broader pullbacks as well. This is something that you're seeing pretty consistent amongst all the currency pairs. So right now it's at the 50% retracement level, but it seems like all of these major currency pairs are finding their way up to these very important moving averages. New Zealand dollar is actually below the 200-day and at the 50-day moving average. So we'll see if we can get a further pullback into this level. This was a level I really liked actually, but I missed it because it didn't pull deeper into my zone here. And this is me just talking in hindsight, but if we can find ourselves back at this level of support, this looks like a very solid level. If you just look left here, once, twice, 3, 4, potentially, or 5, and then maybe 6 times. So we can see how that happens. I'll be more than happy to participate right there. That's my brokerage. Making my MetaTrader making weird noises. But yeah, dollar yen, this is actually a very interesting chart. So we did hit this 158 handle. I did say that this was intervention territory, either verbally or directly here, which is true. So we're pressing up against this level. However, I think we have more squeeze to go. Reason being, in Japan, Takaishi, I believe I'm pronouncing that correctly, considers dissolving the lower house, and she's gonna actually call for a snap election. Snap elections bring a lot of uncertainty. Markets don't like that. Currency specifically do not like that. When you think about the snap election in France, back in 2024, summer of 2024, and then you think of the recent one as well in 2025, snap elections are not good for the currency. It throws a lot of things up in the air, right? Like what's the spending going to be like, things like that, budgets, all that good stuff. So when markets don't know what's going to happen, they move money into other currencies. In this case, dollar yen's going to appreciate on that. If we get a breakout, like usually if we get if a breakout of a level on something like that, a lot of uncertainty, I would buy into it. But just because we're so elevated here, I don't want to risk that, right? You have intervention on the back mind on that trade, so I wouldn't risk just jumping in on a pop, although I do think it can really have some momentum to it, because ultimately once we get into the 160s, that's when the real risk starts to happen. So interesting chart nonetheless. I'll monitor the situation. If you get some kind of a alleviation in tension in Japan, then perhaps this level just holds and you just flush lower, but that's what's going on over there. Metals are rising, which is very interesting, right? So usually when you get some optimism in equities and the dollar, which was interesting thing about today, is that both equities and the dollar actually appreciated, and metals. It's unusual, but nothing's impossible with markets. So I'm curious to see what happens, if this is going to be a topping or if there's some momentum. It hasn't yet made new all-time highs from that initial one. So we had this one at that 85 or 84 something level, and then obviously you can see here on the chart, perhaps this is just a triangle formation, and there's going to be some momentum, some kind of a blowout. We'll see. Oil got a little bit of a pop on this trend line here, this pink trend line, or salmon as some might call it, but then it traded back down below it and it closed right there. So we'll like to see. The thing with oil, I'll go over it very high level. If oil stays elevated, it stays high, that can trickle into the economy, inflationary pressures. If it stays low, the opposite happens, reduced inflation pressures, and that's actually good for equities, bad for dollar. That's it for today, guys. Hope it was helpful. Have a blessed rest of your weekend, and as always, trade safely. Bye bye.